All right, team, ladies and gentlemen, welcome to this training section in which we are going to break down the LLC. Okay, now this is probably the biggest, most confusing topic in the entire US legal system, which is understanding what the heck this LLC thing is. And as you're going to see, it's a little bit like a chameleon, and that's probably the reason why it's so confusing. But I promise you that if you even understand 10% of what it is that we are about to talk about, you are going to be golden, okay? Because we're going to talk about this topic that's called the LLC tax election, and it's this like tax election situation is what we're going to call it, okay? And all of the confusion that comes along with that, okay? So I am warning you ahead of time that this training is going to be the peak of this when we say the layers of learning, and we talk about, hey, you're a beginner, you're going through kind of this first layer, right? But even in this first layer, there's like multiple layers here, right? After this training, we're then going to go ahead and pass into layer 2, which is going to be action, right? So up until now, we've been talking about like, hey, the two types of legal entities and sole prop and corporation. And now this right here is going to be the last piece that you got to understand. Okay, we're going to get a little bit technical here, but I promise we're going to do our best to make it as simple as possible. But for you as a new business owner, or maybe even as a current business owner, this is absolutely critical for you to understand. And I've said this many times before, we wish that there was a training like this that would have saved us literally years and probably tens of thousands of dollars in taxes in order to understand these topics, right? How much money we pay to legal and tax professionals to explain this stuff to us. And even then, they still didn't explain it properly, or they didn't explain it simply to us. And then we bought courses, and then we talked to the gurus, and the gurus themselves didn't know what the heck they were talking about. And so I promise you, it is going to get easier, and it will seem overwhelming at first, but you've been warned that it will get easier, but it will be overwhelming initially, okay? So now that we've gotten these kind of warning out of the way, let's go ahead and actually jump into the topic of what the heck is an LLC, okay? So out of all the different types of legal entities, an LLC is actually one of the newest. It's only been around in the United States for about 30 years and really only popularized and maybe popularly used in the last 20 years. So initially there was only a C Corp, okay? And then they started developing something called an S Corp, okay? And again, we're not going to talk about it in this training, but there's different reasons for a C Corp and there's different reasons for an S Corp. And then the most recent, newest type of legal entity, the newest type of corporation was an LLC, okay? So an LLC was created to be a flexible entity that would allow for even more tax saving options than a C Corp, and would be easier to set up than an S Corp. Okay, so an LLC was designed to kind of be something that is flexible, so that way it kind of does the best of all worlds. Okay, and so today the LLC is by far the most popular choice for new businesses, for holding companies, for real estate companies, and literally almost all other types of business ventures. An LLC is by far becoming the most popular. Okay, and because of an LLC being so flexible, and we'll talk about what that means, flexible, right? Because even when you research online, they're like, hey, an LLC is a flexible entity. What the heck does any of that mean? We're going to talk about that, okay? And so because it's so flexible, it has some kind of special superpowers that allow it to kind of transform, but it's because of those superpowers that is also kind of confusing, because if it was just one thing, it would be easy to understand. But because it's not just one thing, and because of the fact that it has these kind of shape-shifting superpowers, its superpowers is also what makes it confusing. And so really, at the end of the day, what makes it confusing is this thing called the LLC tax election, okay? And we call it the tax election confusion, okay? So let's break this down very simply, so that way for the rest of your career as a business owner, you will not be confused and you'll understand exactly what all of this is, okay? So the superpower that makes the LLC so flexible is also the reason, like we said, why so many people, beginners or not, are so confused by how it works. Because although the LLC works just like any other corporation for the purposes of legal protection, right? So we talked about this in the previous training. If this seems foreign to you, make sure that you did not skip the previous training, because in the previous training, we talked about the benefits of corporations. And one of the biggest benefits we talked about why corporations are so powerful is because of that protection, that separation of liability that it has between the owners, right, and their personal assets and debts, and the business, right? So when it comes to liability, okay, be very clear on this. When it comes to liability, the LLC has the benefits of a corporation, right? Now, when it comes to taxes, this is where a lot of the flexibility comes in how it is taxed. Why? Because here's the crazy thing about this. An LLC can actually choose to be taxed in different ways, right? And so this literally, when you say choose means it's just a form that you fill and you send to the IRS and say, hey, I have an LLC. I want to be taxed like this, okay? And so visually, this is what it actually looks like. Now, let me go ahead and make this a little bit bigger. There we go. So I wanted to make this bigger so you can see this very, very clearly. Okay. So we have, and there's no other legal entity that has this superpower. Okay. So here's the thing. You have your sole prop. Okay. How does a sole prop get taxed? For the purposes of an IRS, a sole prop is a sole prop. It gets taxed as a sole prop. You have your partnership, which is, again, these are the ones that are not corporations, right? We've talked about this before. You have your partnership, right? Again, taxed exactly the same way. You got your S Corp, and S Corp is taxed as an S Corp. A C Corp, taxed as a C Corp. What about this LLC? Well, this is where this LLC can literally choose to get taxed either as what we call a standard LLC. This is our own verbiage we kind of use to simplify this. Or it can be taxed as a S Corp, or it could be taxed as a C Corp. Now, just so you know, a standard LLC gets taxed exactly the same way that a partnership or a sole prop would get taxed, okay? And so basically what this means is that a LLC can, yes, even though it is a corporation for the purposes of liability, it does have that separation, but for the purposes of taxes, right? So if you cross this out and say for the purposes of taxes, it can either be a corporation or a sole prop. Okay. And literally all it is a form that you send to the IRS, and they literally call it a tax election. Okay. So that form that you send is called a tax election form. And so when you first set up an LLC, it's just a standard LLC. It doesn't have any tax election. It gets taxed as a sole prop. And we'll explain this a little bit more in just a second, right? But then when you fill out that form, which is the tax election form, you can then say, hey, I want my LLC to get taxed now as a S Corp. I want to get my LLC taxed as a C Corp. And that is where the flexibility comes in, okay? And so right here, let me go ahead and explain this a little bit more so you can understand this. When an LLC is first created, when it's first started, okay, it starts off as just a standard basic LLC, and it is taxed as a sole prop or a partnership depending on how many people are in that LLC, okay? So if you have your LLC in here, okay, so imagine you have your LLC, and then based off of who is on the paperwork, okay, if there's 2 members or 1 member, if it is a single member LLC, it is taxed as a sole prop. If it is a double member LLC, right, or multiple member LLC, it is taxed as a partnership. But again, both of those only have one tax return, okay? So that's that one part. But then you can choose by filing that form to have it taxed as either a S Corp or a C Corp, and each of those has a different tax structure based off of the form that you filed to the IRS. And so again, this is what is called a tax election, meaning choosing how it is to be taxed. This is why the LLC is so confusing for so many people, because although legally an LLC is just a corporation, because of this whole tax election thingamajig, right? That is where it kind of gets confusing, which is a superpower, but at the same time, a little bit of a confusion, because you're like, okay, well, I got to decide now how I want my LLC to be taxed, right? So it's kind of like a chameleon. You can convert your LLC to act like a sole prop, or you can have it convert to being like an S Corp or a C Corp for the purposes of taxes, right? So pretty cool, right? But also kind of confusing, right? Yes, I understand. And so yes, you are correct. This is exactly the reason why the LLC is so confusing for so many people, okay? And this is kind of the diagram that I think is going to be very helpful for you to understand, okay? So you got to understand that there's kind of 2 sides to this entire equation, okay? There is the liability side, and then there is the taxes side, okay? And so when it comes to liability, an LLC is an LLC. There's no different types of LLCs when it comes to liability, okay? It's just an LLC is an LLC. Any type of LLC is going to protect you from liability, just like any other corporation would, okay? But then on the taxes side of the equation, I'll show you another diagram showing the exact same thing, but just in a different way. On the taxes side, you can have either a standard LLC with no tax election, which is filed very similar to a sole prop or a partnership, in which there's only one tax return that is filed. Or you can have an LLC with an S Corp election, or you can have an LLC with a C Corp election, and that is taxed similar to an S Corp or a C Corp, okay? So let me make this diagram a little bit bigger so you can see this right here. This is what I want you to see right here, right? Because these diagrams here at the bottom are very important, right? So again, we have our 2 sides of the equation, liability and then we got taxes right here, okay? And so you'll see when you have a standard LLC with no tax selection, right? Which is just when you first start an LLC, okay? You have one tax return that is filed and there is no tax separation, meaning there is no savings on self-employment tax. And we'll talk about that in just a second. Don't get confused by that, okay? But if you file that tax selection form, you then have a personal tax return and then you have a business tax return, which again has an additional cost, right? And so now not only is there the cost of the actual corporation, because in order to start a corporation is like $300, $800 a year, okay? But then you got to pay an additional amount in order to have a business tax return filed as well, okay? So again, this is just adding another level of your understanding, another tool in the toolbox for you to understand, hey, we got our hammers, we got our screwdrivers, we got our Phillips head screwdriver, our flathead, all these different types of tools. And so now we're understanding, okay, wait a second. We're building our layers of understanding, our levels and depth of how this game is played, which again, on the surface, when you first hear about it, can sound confusing, but these diagrams hopefully make it a lot easier, is that you just got to ask yourself, hey, am I talking about liability or am I talking about taxes? When it comes to liability, an LLC is just like any other corporation. It will protect me from liability. It's going to have that separation. When it comes to taxes, it depends. Does my LLC have a tax selection form filed with the IRS or does it not? If it doesn't, I'm going to have one tax return that is filed, and that is going to be not saving me any taxes. It's going to be filed just like a sole prop. And if I do have a tax selection form filed, I'm going to have two tax returns, and I'm going to be able to benefit from the advantages of self-employment tax, right? So let me show you the same exact thing, but with a different diagram right over here, okay? So this is just the same exact thing. You got your liability side and you got your taxes side, right? So we make these different diagrams so that way you can understand the same topic kind of with different visuals, okay? So you got your sole prop and you got your partnership, okay? For the liability side, that's what they are, okay? And then you got your taxes here, okay? Now, same thing, but an LLC, again, for the purposes of liability is on the corporation side. But for the purposes of taxes, it could either be on the one tax return file side, or it could be on the two tax return file side here, in which there are different pros and cons here on the tax return. Okay, so bottom line, what is the summary of all of this? What is it that you got to know so we can move on to the next section and blow your brain a little more, okay? Essentially, you just got to know that when it comes to taxes, with an LLC, there are two types. It's either going to be a standard LLC, in which there is no tax selection. Okay, let me just go ahead and clear that so you can see a little bit clearer. Either going to be a standard LLC, which is like, hey, I first opened my LLC, I did not do a tax selection. That is going to be the first type. The second type is going to be, hey, I filed a tax selection with the IRS for my LLC to be taxed like a C Corp or an S Corp. Okay, now normally it's going to be an S Corp filing. There's a whole bunch of reasons for that. I'm not going to go into that right now, but usually a C Corp filing is going to be for bigger corporations with stocks and board of directors and stuff like that. Normally for small businesses like us, we're going to be filing a S Corp tax selection for the LLC. Okay, so as long as you remember this right now, for the purposes of taxes, okay, again, for the purposes of taxes, there are two types of LLCs, standard and tax selection LLCs. When it comes to liability, only one type. It doesn't matter. It's just an LLC. It's just a normal corporation. Protects you from liability. Capiche? Does that make sense? I hope that is making sense right now. Okay. Now just review this if you need to. Again, repetition is going to be the thing that you have to understand this. And what we're going to do now, after that understanding, is we're now going to go ahead and take your understanding another notch up. Whew. Take a deep breath with me, okay? Stick with me here, okay? I know it's going to get a little bit more complex. I told you we're going to be working. We're going to literally break free out of this beginner layer one. We're going to get into the action. This is the peak of it. Trust me, we're going to make it through. Right now, you're going to feel like you're going through the valley of despair. You're becoming conscious of your incompetence. You're like, oh man, there's a lot more to this than I thought. Trust me, stick with me. We're breaking it down as simple as possible. Let's go ahead and double click into this LLC taxes situation together. Okay, so LLC and taxes. So do you remember in the previous training when we talked about corporations, we said that the two big reasons why people start corporations, right? If you skip that training, come on, what are you doing? Go watch that training. Very important. The two big reasons people like to start corporations is because of liability and tax savings, right? Beautiful. Hey, coach, we don't have to go over the liability part. I got it. Okay. We got this entire liability part right here. It makes sense. There's corporations, there's non-corporations. Non-corporations, you don't get separation from liability. Corporations, you get separation from liability. Got it. No issues there, right? But now when it comes to taxes, like we talked about, this is where it is confusing because the sole prop, like we said in the previous training, is at a disadvantage, right? Do you remember we talked about this whole Social Security, Medicare tax thingamajig, right? We talked about this and we said, yo, the sole prop, no bueno when it comes to start making substantial money, right? So when you start making $50,000, $70,000, $100,000 a year, you being a sole prop is messing you up because of the fact that you're having to pay double taxes. But that is where when you become a S Corp or any other type of corporation, you actually save on self-employment tax. Now, here's the thing. We said any other type of corporation. That is not actually a true statement. Why? Because when it comes to LLCs, it depends. Depends on what your tax selection filing is, okay? Remember we said there's two types. If you have a standard LLC, there is no savings when it comes to Social Security and Medicare tax because you are being taxed the same way as a sole prop, okay? So let me go ahead and walk you through this right now very clearly so you can understand. Remember all of the cons that we talked about when you have $75,000 in income and then you have a sole prop and then you have to pay both sides of the taxes. So that way it equals 15.3% and you have to pay $11,000 in taxes. Well, all of that we said in the previous training as a con to the sole prop also applies to the standard LLC in which there is no tax election. This is very important to understand. I hope I am not losing you right now, okay? Please just stick with me. We're taking it step by step, okay? The sole prop and the standard LLC in which there's no tax election have the same issue. Why? Because when you are a sole prop or when you are a standard LLC, you are both the employee and the employer. And so therefore, what you are doing, right? So this category right here in which there's only one tax return being filed, okay? When there's one tax return being filed, a sole prop or a partnership, if that's the case, or a standard LLC with no tax election, you are on the bad end of the stick once you start making a substantial amount of money because you're having to pay both Social Security and Medicare tax. And when you have to pay both because of the fact that you're a sole prop or a standard LLC with no tax election, they call that self-employment tax. We talked about this in the previous training already, okay? And so, yes, for the purposes of liability, right, this side of the equation here, yeah, sure, an LLC is different than a sole prop, right? Because a sole prop isn't a corporation. Sole prop screws you over because you don't get that separation in liability, right? So for the purpose of liability, yes, an LLC is different. But for the purposes of taxes, a standard LLC is no different from a sole prop. Okay, this is very important to understand. This means that a standard LLC in which you do not have a tax election, in which you did not file that form with the IRS, does not save you on self-employment tax. Okay, yes, you still get the business deductions on everything, right? We talked about that already. Business deductions, everybody gets the business deductions, right? If you got that Oprah meme, you get business deductions, you get business deductions, you get business deductions, sole prop gets business deductions, LLC gets business deductions, everybody gets business deductions. But when we talk about self-employment tax specifically, okay, a standard LLC does not save you on self-employment tax. I'm going to say that again. A standard LLC in which it does not have a tax election form filed with the IRS does not save anything when it comes to taxes because it is treated by the government as one tax return, okay? And it is treated exactly the same way as sole proprietorship in which you are having to pay both sides of the taxes. Are you following along with me thus far? I hope so, okay? So then the question after that would be, how do you actually save taxes with a corporation? This is where that whole tax election form comes in, okay? Now, again, don't get confused by it. It's literally just a form that is filed with the IRS, okay? It's just called a tax election. That's all it is, okay? But this is what happens is that you are then, with that form, able to take your standard LLC that has no tax election on it, right? It's kind of like, hey, do you have this attached to your LLC or not? If you have it and you file that form, you then go and boom, you then jump into becoming an LLC with, let's say, for example, you filled out the S Corp tax election form, but there's also a C Corp tax election form. But like I said earlier, 9 times out of 10, you're probably going to have an S Corp tax election form because it's for small business owners and there's additional tax savings that you get as a small business owner because most of us are not running a C Corp. There's no reason for us to be running a C Corp, at least for the tax law that is right now, okay? For a long time, this has been the case, okay? And so with that tax election form, that is how you go from being just a standard LLC and you jump now into becoming an LLC with a tax election. So another visual over here, with that tax election form, that is how you go from here to here, okay? Whether that be S Corp or C Corp. And like I said, you're typically going to be more on the S Corp side, okay? So first you open an LLC. Then when you are ready, you file that form with the IRS and you tell the IRS, hey, I want to put myself as a tax selection on my LLC. And that is basically saying, yo, I have this LLC. From now on, tax me as fill in the blank, S Corp or C Corp. Now, why is this helpful? The reason why it is helpful to be able to go ahead and change this chameleon type of behavior, because when you first start out with your LLC, if you decide to go with the LLC, we'll talk about some of the options in an upcoming training section. But when you first start out, you might not know how much money you are going to make in a year. And that is completely normal, right? Because of the fact that you are starting something new. So you might not want to start off as an S Corp or a C Corp off the bat. Why? Because an S Corp or a C Corp, there's going to be additional fees that come along with them. And then on top of that, if you don't make enough money, do you really want to have to file a whole separate business tax return? So then you got to pay an accountant to do your personal taxes, and then you got to pay an accountant to do your business taxes as well. But if you're like, you know what, I didn't make that much money, then you're like, you know what, because I was doing this on the side, I was still learning, all this kind of stuff. You're like, you know what, I had my LLCs, my standard LLC, and I never did this whole tax selection thing. So I only have one tax return, okay? And so here's the thing. Because you don't know how much money you're going to make, and you don't want to start off with the S Corp or C Corp because you're still dabbling and you're still trying to figure things out, you might decide, you know what, I'm going to start off my first year in business. And I'm not saying that this is what you should do. We'll talk about the scenarios about what we would do, but I'm just giving you some scenarios so you can kind of think through this, okay? You might decide, you know what, I'm going to start off my first year in business with just a standard LLC and see how things go, okay? And then right here, so think about this. Imagine this is January 1st. Obviously, it's never this clean, but I'm going to go ahead and give you an example here because this is a fiscal year. Fiscal means the financial year, the tax year, right? So typically it's going to go from January to December, okay? And so what's going to happen is you start in, let's say, theoretically, in January, February, March, whatever month you start in, okay? And you say, cool, I'm going to be a standard LLC. No tax selection. So that means I'm going to get taxed as a sole prop, okay? And then as the year goes on, you're like, man, things are going a lot better than I thought, right? I got access to this business basics course. I got access to this launch course. I actually learned how business is done. I learned about marketing. I learned about sales. I didn't think I was going to make that much money, but then it ended up going really well. And I went ahead and actually made a good amount of money. Now, usually what we say a good amount of money is going to be $75,000 to $100,000, right? So typically past $50,000 to $75,000 is when you actually want to take this into consideration. If you make less than that, typically it doesn't work out where it makes sense for you to get that tax selection. But if you start making more than $50,000 or $70,000, it does. And so then you might decide, you know what? It's worth for me, because I want to save on taxes, for me to now become an S Corp. But here's the problem with that, right? If you were stuck with that LLC, and let's say an LLC could not be changed, right? So let's say, for example, you could not change the LLC was the LLC. You would have to shut down your LLC and go open an S Corp. And you would lose all of you'd have to open another bank account, you'd have to get another registration. And on top of that, you'd lose all of that revenue, all of those deductions that you got inside of that corporation, inside of the LLC. But then here's the thing. Instead of going out and just opening an S Corp and lose all of that, progress that you had with your LLC, tax deductions, revenue, etc., you can now just convert your LLC by getting an S tax selection, and that's going to then further save you on taxes. Because here's the thing. As you were going through the year, you didn't know how it was going to go. You didn't know if you were going to even have that much taxes to save on, right? Because if you don't, here's the thing. People are like, oh, I got to save on taxes. Like, dude, 30%, because taxes are usually 30%, depending on if you had state tax rate, if you live in California, add another 10%, 12% of that, right? So let's say 30%. 30% of $0, my friend, is still $0 in taxes, okay? And so some people are like, I got to learn how to save on taxes. And they're not even making any money yet. 30% of $10,000 is still not that much, right? And so that's the reason why they say typically 50, 75,000, 100,000, somewhere in that range, it now actually starts to become a significant amount of money that you would save on taxes that would offset the complexity, the additional fees, the additional tax return of actually doing the tax selection, okay? So no other legal entity allows you to transform how you will be taxed literally just in the middle of the year. You could literally make up your mind as long as you're doing it before December, right? And there's some legality around this, right? So if you have a very savvy legal and tax professional, they will know what they are doing. If they know what they're doing, they will know that there are IRS rulings with special documentation that allow them to what they call retroactively do a S election, okay? So again, you got to just make sure that you got somebody who knows what they're doing, okay? And we're going to make some recommendations for you later on so you can better understand this. And so with all the other entities, once you are that entity, that's it. You're locked in. If you're an S Corp, you're an S Corp. If you're a C Corp, you're a C Corp. If you're a sole prop, you're a sole prop. You can't change it. But not with the LLC. You can choose to be taxed differently retroactively. So you can literally go back in time, right? So it's kind of like time travel over here, okay? You can literally be like, look, I was a standard LLC for most of the year, but I'm now going to do a retroactive tax election and say that all of the income that I generated as a standard LLC, I now want that to be S Corp revenue being generated. How cool is that, right? And so again, just to go over this one last time, just so it's very, very clear, why would you want to be taxed as an S Corp once you hit between $75,000 and $100,000 in annual revenue, right? Why would you want that to be the case? Because when you have an LLC that is a corporation and you tell it that, hey, Mr. IRS, Mrs. IRS, tax me as an S Corp, you get to then divide your revenue into owner's distribution and salary, employee salary, okay? So you only have to then pay self-employment tax on the employee salary part of your profits. Now, we talked about this with the S Corp example, if you remember previously, right? So we went ahead and said, hey, this is what it would look like, right? So you come over here and let's say, for example, you got your sole prop, you got your standard LLC, and you got your LLC with S Corp tax selection, okay? And let me go ahead and make this a little bit bigger for you so you can see it. I personally love seeing these numbers like this because then it allows me to actually make it tangible, which is like, okay, cool. I got my sole prop, I got my standard LLC, I got my LLC with S Corp tax selection. Remember, the only difference between these two right here, okay, is that this guy right here did not file the form with the IRS. This guy did file the form with the IRS. And so let's say in all three examples, we have $100,000 in revenue, okay? They generated $100,000 in revenue. Let's say they had about $25,000 in business tax deduction write-offs, okay? So they, notebooks, computers, all of the stuff that we talked about. Okay, what they are left is their pre-tax profit earnings before tax, which is $75,000 across all three of them, okay? Now, here's where it gets interesting. If this person is a sole prop, they did not know anything about anything, right? They did not take the business basics course. They didn't understand anything. They're like, cool, I was just running my business, worried about marketing and sales. I didn't understand how this game is played. I was just a sole prop. I was just running out of my bank account. Okay, that $75,000, they're going to have to pay self-employment tax, which is 15.3%, which is going to be $11,000. Okay, so you take $75,000 times 15.3%, it's around $11,400, right? Then obviously after that, they got to take out their federal income tax, their state income tax. That's not going to change, right? And so then they have to pay $7,500 more in additional taxes, okay? Standard LLC, because it works exactly the same way as a sole prop. Let me clear this out so you can see this, okay? Because it is taxed exactly the same way as a sole prop, these two fellas right here, they are screwed for the exact same amount, okay? They do not get to save anything on the self-employment tax, okay? Right over here, they are saving nada. But then this person over here, they understand, hey, I could file a retroactive S election. I could actually understand how this game is played. On that same $75,000 in income, I can divide it on $50,000 is going to be owner's distribution. And then I'm going to make $25,000 of that employee salary income. They're only going to pay the self-employment tax on the actual employee salary part of it, which is going to be roughly about $3,500. And so they're going to save $7,500 in taxes because of the fact that they were more savvy about this. Is this making a little bit more sense? I hope so. This is, again, the peak of your understanding. This is as complex as it is going to get. We talked about sole prop. We talked about corporation. I talked about S Corps a little bit in previously, but now you're understanding, hey, with the LLC, I can have that S Corp tax election. Okay, so with the LLC, you can get the best of all worlds as long as you understand how it works and how to actually use it. And that is why the LLC is such a great corporate structure, so long as, so long as you understand how it actually works. Okay, now I'm going to remind you one last time. You do not have to 100% get, memorize, or understand anything that we went ahead and talked about inside of this training section, okay? Remember, the more reps you get with this, the more you marinate in this, the more you actually take action on it, the more you actually go out and if you're going to set up an LLC, which will walk you through the setup process, if you're going to be a sole prop or a standard LLC or an LLC with a tax selection, the more you go through with this process year after year after year, remember, you're going to be in business for a very long period of time. The more you go through with this, it's going to click for you more and more and more. And that's the reason why it is so important to make sure that you have these trainings as a reference guide for you so you can come back to them again and again and again and understand exactly how all of this works. Because every single time you watch these trainings, as you start to change, right? Because you're watching this training right now at your level of business right now. But as your level of business increases, you come back to these trainings and I promise you, you're going to understand them at a completely different level. And so I hope I hope this is starting to make a little bit more sense. Okay. I hope that your level of learning is increasing. Okay. And again, don't worry. Like I said, if this is your first time hearing this, it is going to sound confusing, but with repetition, it will get easier. Now, before we close out this training, I do want to go ahead and answer one more question that will come up a lot of times for beginner business owners. It's like, hey, why does anyone even have a standard LLC, right? So like this puppy right over here, this standard LLC, no tax selection, what's the point of it? Like, why doesn't everybody just off the bat open an LLC and immediately file that tax selection form with the IRS and then start to actually get into this category over here, right? Like, why not do that? And why not actually separate from the get-go, right? Because we talked about the cons of having to pay that self-employment tax. Why not off the bat just separate between your owner's distributions and your employee salary income so you can start saving on taxes, right? The reason is because there is additional fees and complexity, is because when you go into this category right over here, right? And I think I mentioned this earlier, but I'm gonna mention it again, is that you now have to pay yourself payroll, which is an additional cost every single month that you got to figure out how to do, okay? Because in order to be able to get this separation, right? So this separation here between owner's distribution and payroll, that means that you now have to actually treat yourself kind of like an employee of your company, which is kind of confusing, but that's the whole point of this separation, right? This separation allows you to kind of become the employee of the company rather than being the company, okay? That is the first additional cost that happens once you actually get into this category right over here, okay? The second additional cost, and I alluded to this before, is that now there's another tax return. It's called a business tax return that has to be filed, okay, because you got that tax selection. And so now there's that additional cost that you then have to do, which is even more expenses. And so because there are all of these fees, when you decide to convert your standard LLC, this puppy right over here, when you decide to convert this standard LLC into a, tax selection LLC, because of that, it depends on how much are your tax savings really going to be, right? Because there's going to be additional cost and complexity here. And so you got to actually weigh, hey, does the additional cost and complexity actually offset any tax advantages that I would have? And so if you are below, and this is just a general recommendation, right? If you are below $50,000 to $100,000 in yearly earnings, the extra fees are typically not worth the extra tax savings. So it's better for you to just stay as a standard LLC without any tax selection. But again, remember, you still get the liability protection because you're an LLC, but you just don't get any tax benefit because you're a standard LLC. And so typically if you're below that mark, that is going to be like where most accountants and most people would say, hey, you know what? It might be better for you to stay a standard LLC. And then as your business earnings get above $50,000 to $100,000, then you know what? You're going to save enough on taxes that it's worth for you to be able to mess with all of the complexity that comes from this category over here. Does that make sense? I hope so. Again, we're doing our best to make this as simple as possible. I know it is not an easy topic. I know it's not an easy subject. And this is the reason why the entire industry literally feeds off of the confusion of people, because unfortunately, most people do not have the opportunity to have access to training like this that simplifies this for them and actually walks them through this entire process step by step. And hey, guess what? We're not even done yet. We still got to get to the practical part of this entire training in which we're going to walk you through, hey, what's your scenario? This is a recommendation of what we would do, all of that kind of stuff. We're about to get into that in the next training section as well. Okay, so this is what the table looks like in regards to where we have been thus far and putting all of the different factors together, right? So we got our sole prop and then we got our LLC. The LLC is a corporation, so there is a cost in order to be able to actually renew that with the state, $300 to $800 per year, okay? And then over here, it kind of divides up. You either have the standard LLC with no tax selection, right? Or you have the LLC with the S-Corp tax selection, right? So over here, when it comes to, let me go ahead and clear this out for you, right here, when it comes to self-employment tax and saving self-employment tax, sole prop, wrong. There's no self-employment tax savings on there, okay? And then same thing here, standard LLC, nope. No savings for self-employment tax at 15.3%, Social Security and Medicare tax that you got to pay on both sides, but the tax selection does have those savings, okay? And then in regards to taking payroll, do you have to pay yourself payroll on a sole prop? You do not, so you can save $50 per month there. And then over here, you do not have to pay yourself payroll either because as a standard LLC, you are literally the business, so there's no separate tax return. There's no payroll that you're paying for yourself. However, over here, because you on the business are separate now, there's two tax returns. You have to pay yourself payroll separately as an employee of the company, right? Tax return complexity, right over here. There's a personal tax return, which is called the 1120. You don't have to remember that. Just marinating in it. And a Schedule C form, which is filed with your personal taxes, right? And over here, pretty much the exact same thing. You're just filing the 1120 with a Schedule C form. But then over here, not only is there your personal tax return, but then there's also an S Corp tax return. So there's 2 tax returns that are filed here versus there are only 1 and 1 that are filed here. And then finally, you got our overall cost over here. It's free, basically maybe $25, here and there. But then over here, you got $300 to $800 setup plus yearly renewal. And then over here, this is going to be the biggest kind of cost over here, $300 to $800 setup plus yearly renewal plus separate tax return plus having to do the payroll cost over there as well. Okay, so these are the options that we've talked about. We're going to go ahead and really break down each of these options in the next training. But ladies and gentlemen, I want to congratulate you because you have made it. Congratulations. You now have an introductory understanding of, in my opinion, the most complex, the most misunderstood, the most kind of strange topic in all of legal and accounting, which is the LLCs. Has this training opened your eyes? I hope right now you are saying, yes, coach, my eyes have been opened. I now understand, hey, there's liability side of the equation, there's the taxes side of the equation. And even with this introductory understanding, I'm telling you, compared to what most business owners or wannabe business owners have, you are an absolute pro, even with this just basic understanding that we've talked about here, okay? And honestly, I would venture out to even say that compared to most people who have even been in business for a long period of time, you have a better understanding than they do on these topics as well, okay? So you are well on your way to becoming a professional entrepreneur. So we were not joking when we said that we were going to build your understanding layer by layer by layer by layer, because of the fact that you saw we started off very, very basic, but then we started getting more and more advanced, and now we're here at the top of the mountain. I'm sure it must feel great to have a better understanding of these topics. Now, for some people right now, they're like, this does not feel great, coach. Holy moly, my brain is on fire. I'm scared. I'm overwhelmed, okay? And so let me go ahead and just calm you down for a second, okay? How many reps have you ever had learning about legal and tax structures, right? Do you just in your free time spend time looking at legal and tax structures? Probably not, right? And so obviously the same way that when you learn how to swim or when you learn how to ride a bike or you learn how to drive, you probably were overwhelmed as well, okay? And so why do you think that you're not going to be overwhelmed the first time that you look at freaking legal and tax structures? Of course you are, right? It's a complex topic. And so it's normal to be overwhelmed, right? This material is no different from anything else that you learned for the first time, right? And yet there are millions of people out there that have been able to do this, and so can you, right? Is everyone else out there who's learned it feeling afraid, right? Does anybody else feel like this? How can I get past this feeling? These are questions that sometimes a lot of beginners have, like, hey, why am I so afraid? How can I get past this feeling? I'm here to tell you, what you may be feeling right now as you start your business is completely normal, okay? We all feel overwhelmed, confusion, fear, doubt, uncertainty, right? There is no, how do I get over this feeling? It doesn't exist. You will not get over this feeling because you are learning something new. That is how life works. But here's the difference. Professional business owners versus those who wear the failure uniform and want to be entrepreneurs, right? They feel the same way. The only difference is that the failure uniform business owners, those who are entrepreneurs, they let those feelings stop them, while the winner business owners, they push through despite how they feel, despite the fear, despite the doubt, despite the uncertainty. They do not let those feelings stop them. Because I think a lot of people who are beginner new business owners think that, oh, because I feel this way, something must be wrong. Those people who are successful, they must not feel this way. I'm telling you right now, that is not true. It is absolutely false. When you start to judge how you are feeling and you think that you shouldn't feel this way, well, guess what? That is when you are actually giving those emotions even more power, okay? Because if you get caught up saying, hey, I got to stop feeling this certain way, it's only going to get worse. Instead, what you got to tell yourself, hey, this overwhelm, this confusion that I'm feeling, it's normal. Everyone feels this way when they are starting something that they haven't done before. Everybody felt the same way when they started to learn how to drive or when they had to learn how to swim, right? Everybody feels the same way. Michael Phelps, the Olympian swimmer, when he first learned how to swim the first time, I'm guaranteeing you that he was not born knowing how to swim. People are not born knowing this stuff. They just put up with the feelings long enough in order to actually get good at it. Okay, so don't let that stop you, right? Say, I won't let that stop me. I'm going to push through anyway. Normal human emotions, every single person feels the same. You got to become the type of person who doesn't let those emotions stop them. This is the type of person who is a winning professional business owner. And I have no doubt that if you keep on sticking with us, right, we're going to walk you through this process. I promise you, you can get there, and we're going to be there to support you every step of the way. Okay. So here's the thing. If all of this did go over your head, don't worry. It's fine. There is no test here. Okay. It's just something that's good for you to be familiar with. And this training is going to be here for you for a very long time for you to be able to come back and reference. And then when you start making past $10,000 a month in income and you start to take your taxes more seriously, then don't worry. We're going to have even more advanced course, right? The mastery course of tax and legal mastery that's going to walk you through that furthermore. Now, as you close out this training, does this mean that you can skip all of this? No, nobody's saying that you got to have a PhD in all of this. It's just helpful for you to know all of this stuff when you go talk to a CPA, okay? So because it's not a matter of how much money you make, it's a matter of how much money you keep, and knowing how this game is actually played is going to allow you to keep more money, right? Wouldn't it be smart for you to be somewhat familiar with what the heck that tax or legal professional is going to be saying to you? So that way, not only are they not ripping you off, but I have had plenty of tax and legal professionals in which I had to remind them and ask them questions that would have literally cost me tens of hundreds of thousands of dollars in additional taxes. Okay. So this is the reason why you do not want to skip this. And that's why you can't just leave it to the lawyers and the accountants to only deal with this. You want to be familiar with this. And again, we are doing our best, ladies and gentlemen. We are doing our best to go ahead and give you that kickstart. I know this training was a little bit longer. I apologize. I'm sorry. This training was a little bit more intense. We were dealing with probably the most complex topic in all of it, which was the LLC. But again, we're going ahead and explaining to you this in the next training section. We're going to go ahead and actually get into the practical so you can start to actually go ahead and get started with your corporation in the background. And then once that corporation in the background has been started, you can then continue and move on with your business website, your client agreements, learning about marketing and sales and all that stuff with this corporation stuff happening in the background. You are through all of the difficult parts now. We are going to go ahead and close this training off. LLCs Explained, ladies and gentlemen, liability, taxes. Oof, my mind is blown. I need a break after this one. I don't know if you need a break as well. But with that being said, ladies and gentlemen, we will catch you now getting into the tactical and the practical in the next training section.